Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. As we get into the tax season this year, I wanted to ask Mark Sipos, the director of LFG Tax Services, to join us to talk about the important changes and tax tips that could really help you out this year. So Mark, thanks for joining us.
Thanks. Good to be back, Jim. The first thing I want to address are those tax stimulus credits. What most people don't understand is if you haven't received your stimulus check, you still may be entitled to get it. If you retired during 2020, or maybe your finances changed dramatically, like your income dropped, you still may be able to recoup the full credit amount and even more if you have eligible dependents.
So for example, I know we had several clients who had pretty large buyouts in 2019, and so they had a very high income. But in the first year of their retirement, which was 2020, they actually met the criteria for the stimulus checks.
Right. So if you're working with a tax professional, make sure that you walk through those eligibility requirements and also let them know if you did or did not receive those tax credits.
And I know another notable change was that you didn't have to take the required minimum distributions in 2020, but as far as we know, you do have to take them in 2021.
That's correct. And that's something you want to take into account when you're planning for 2021. But you're still able to use the qualified charitable donations or QCDs to reduce your tax burden, or you might be able to look into some donor advised funds. This year, because of the CARES Act, you're also allowed to deduct $300 per return as an above line deduction without having to itemize. Next year for 2021, it's going to be $300 per person.
Well, that's good. And there's also still time to fund things like health savings accounts, simplified employee pension plans, Roth and traditional IRAs, all for 2020. But you got to make sure you get it done by April 15th of this year.
And for those high income earners, you might be able to do a backdoor Roth. You can avoid the income restrictions of funding a traditional IRA and convert it immediately into a Roth IRA. But there's plenty of nuances to this strategy, and you want to make sure you consult your financial advisor and your tax professional before trying to do this.
And I know last year some deadlines had changed because of COVID, but we're back on track for this year, correct?
That's correct. Even though the tax filing season started about 2 or 3 weeks later than it normally does, all taxes so far, the deadline and the amount to pay is due on April 15th.
And this is a particularly tricky year given COVID, the stimulus checks, and the way that many people's finances may have dramatically changed over the last year.
We're here to answer all your questions, help get federal, state, and city tax returns filed, and we take the time to have tax planning discussions with all of our clients to help set them up for success in their future.
So Mark, thanks for sharing these tips. And if you have any questions, give Mark a call. He's happy to help. Stay tuned for the Chris Wallace Show coming up next.